This week, investors in one of the world's dominant mineral sands miners, Iluka Resources, had an opportunity to reflect at their AGM on the extraordinary ride they've had over the past couple of years. 2 years ago, in the midst of the GFC, its sales and cash flow had dried up, its banks were nervous, and investors were asked to kick in for a big capital expenditure program. Gulp. Well, it was dark days for a company that can trace its heritage back to the 50s, but the decision to dig deep and push on has been well and truly vindicated, as Iluka's share price nudged $16 compared to the sub-$3 levels of 2 years ago. I spoke to Iluka chief David Robb about the turnaround and how he's transformed the company from a price taker to a price setter. David Robb, you've produced an incredible turnaround at Iluka, but you must have just been licking your lips when you came from Wesfarmers Coal into Iluka and seen a company that had enormous market power that just wasn't using it. So what you did was you squeezed supply by shutting down production. Isn't that right?
Well, I don't think it's quite as simple as that.
It cuts a long story short, I'm sure.
We certainly had opportunities, I thought, to not only make Iluka a better company, but to play our part in changing the way the industry acted, and certainly some of the pricing behaviour in the industry I thought was fairly old-fashioned, to say the least. So we've done our bit, and as you say, we've certainly idled some capacity that wasn't really making much of a return for our shareholders. And we've
invested. But did you have in mind when you did that, it wasn't just about the fact that that particular capacity wasn't making a return, you did want to restrict supply, didn't you, in the industry?
Particularly during the global crisis, we felt as the largest zircon supplier, the heavy lifting had to be done by us in order to make sure there wasn't a big supply overhang.
Well, other miners around the world were actually flooding supply out there. I mean, they were increasing supply in order to maintain their profits during the crisis. So it must have been a pretty gutsy effort to do the opposite.
I think there were two big calls we made in 2009. That was one, to actually cut back supply and try and balance supply and demand. The second thing was to keep going with the projects, which was consuming a lot of cash, and there wasn't much cash coming in the door at that time. So they were the two calls, I think.
And in titanium oxide, you had a pricing situation of cap and collar, which restricted your price increases to, I think, for 3% a year or something for 10 years. And was it just luck, do you think, that those contracts actually were just about to expire when you took over?
I think that's just an accident of history, absolutely. We actually came out from under those contracts first. So that, although you might think it's very logical that we would play a lead role in zircon, it's actually fallen to us because of timing to do the same thing on the titanium side of the business.
Well, with zircon, and I think you had fairly cosy arrangements with the Europeans in zircon going back a long time. And didn't you come in and say, hang on, the Chinese are buying a lot of this stuff, let's move our focus from Europe to China?
I felt we were not paying enough attention to emerging markets generally, China in particular. We had to re-engineer our logistics. We've based people in China rather than trying to support our marketing from an Australian base. We've got people resident in various parts of the world now, and I think we're much more international in our approach to marketing.
So how did the customers respond to all this? I mean, they'd been used to dealing with a fairly supine supplier of zircon and titanium oxide, and all of a sudden you were coming in and throwing your weight around. So how did that go?
There were some really interesting discussions along the way, but I think one of the things we've tried to do, as I mentioned right at the outset, is we can't be a profitable company in a basket case of an industry. It just doesn't work that way. So we've always wanted to help our customers adjust their pricing as well, and to give them time to get their markets moving also, to protect their margins. And that's actually what's happened. So
but didn't you squeeze their margins? Didn't you squeeze their margins by increasing their raw material prices?
It actually hasn't worked that way. At the end of the day, the value of our raw material in a tin of paint that you buy or in a square metre of tile is single digits %. So we always felt the whole chain could adjust. The end consumer would pay a hardly noticeable bit more, and margins could be preserved downstream of us, notwithstanding the fact that price for our product was going up a lot. So that's the way it's worked out.
Double, isn't
it? Yes. So that's the way it's worked, and we keep a close eye on that. We need our customers to be healthy. We need them to be wanting to invest to grow, and that's what's happened.
In a recent presentation, you compared your products to peak oil, which implies that the production is declining and there's no more sources of supply. Are you sure of that? I mean, are you sure there won't be any surprise suppliers bobbing up?
Well, we don't know what we don't know. Obviously, if someone other than us made a really big discovery tomorrow, in time that would have an effect. But there's a lead time from discovery to first production that provides a buffer. I think what you do see is sort of two overarching themes in the world today. One is the demand from emerging economies for raw materials, and the other thing is the world is struggling in many areas to respond to that demand. Our industry is the same. The peak oil reference also really relates to the fact that in order to sustain oil supply, the world's relied on technological advances, deep water drilling, 3D seismic, all of those things that have actually made more oil available. I don't think we've seen the same technological breakthroughs to produce more in many mineral resources, and without that, I think the supply problem is going to continue for quite a while.
So what is the demand-supply situation now, as far as you can see, and what do you think the price of your products is going to do?
Well, we don't give price forecasts. We do think that supply is a problem, and all of our markets are very tight, arguably deficit in some cases. There is simply not enough supply, and so customers have idle plants. We don't see an answer to that for some years. Therefore, you would assume that pricing momentum would be sustained, and that's our view.
One of your assets is iron ore. You've got a royalty stream from BHP's Mining Area C. Now, in 2007, there was a group of shareholders that include Robert de Crespigny and James Packer, in fact, who were trying to get you to hive that off.
Right.
And you refused. But it makes sense, doesn't it?
Well,
particularly now that you're making so much cash from your core operations.
It's a unique asset. I think they're very hard to get, assets of that quality, and I think you deal with them, therefore, very cautiously and carefully. It is a gift that keeps on giving. It has great growth. It's got a blue-chip counterparty in BHP. We can't lose it. I don't even have to write a letter once every 10 years to say I'd like to keep it. When you get assets that are of that quality, I think you move very carefully in thinking about them. There is potentially value arbitrage in that if you look at how royalty entities are valued by the North American market, say, they would possibly ascribe a much higher value to it if it was separated from Iluka than where it currently is. So we have to think about that.
But you love it.
It was a very important cash flow during the time of transforming the company. Clearly it gave our banks a lot of comfort knowing that no matter what happened in mineral sands, there was an incredibly valuable iron ore royalty that they could rely upon.
And what are you going to do with all your cash? You're going to make takeovers?
We're going to reward shareholders. We're going to invest probably a little bit more in organic growth within our own portfolio. We see in mineral sands the best opportunities we have are actually already within our grasp. So that'll be the priority. It'll be growing organically. It'll be disciplined. And it'll go back to shareholders if we don't have a better use for it.
AGM this week, a bit of a protest vote against the remuneration report because of the plan to adjust your termination arrangements, increase your notice from 6 months to 12 months, and also to let you keep your long-term incentive shares if there's a takeover and you get fired. So do you think the buggers ought to be more grateful to you, perhaps?
No, I don't. In fact, I'd like to correct you just on one thing. The actual remuneration report itself received an overwhelming yes vote. I forget the exact
that bit of it got 40%
There was a separate
protest.
There was a separate resolution in relation to termination arrangements that was less favoured by shareholders, but the majority of shareholders supported it, and as far as I'm concerned, we move on. The job's all about creating value for shareholders. That's actually if you think about it, that's an issue that is entirely hypothetical, and I'm pleased.
Is it hypothetical? I mean, don't you think Iluka will get taken over at some point?
Well, you never know. If someone were to come knocking on the door, then your job is to respond in the best interests of shareholders as a whole. So I don't actually think about that very much. My job's actually to generate the value and see what happens and try and get that value to shareholders as quickly as we can.
I guess the reason that there's a protest vote for something like that, and I think it was actually campaigned against by some proxy advisors, is that you have a bit of a counter incentive in that you just want to, in that situation, you want to sell the business to get your LTI.
No, I don't.
I'm not saying that's how you feel. That's what the protest is about.
I think that's a pretty silly argument, frankly, and I think that sells any CEO or board short. No one acts, I think, in that situation out of self-interest, and the scrutiny that applies to anyone's actions today means that that's an unwarranted fear, I think.
Thanks for joining us, David Robb.
Thanks, Alan.